Hi guys, thanks for joining me once again. Thanks ever so much for your support, and do actually subscribe to this channel if you want to watch more of these videos. I've got plenty in the channel already and also plenty on the way. Now, I decided that I was going to become a specialist at reading price action, a technical analyst, and a specialist technical analyst at that, because I specialize in short-term trading. I teach other traders short-term trading techniques. And when you're starting to trade, people always say to you, they say, you should trade with the trend, and trading with the trend's okay, but if you wait for a big breakout when the market's going up, if you wait for a big breakout long and then you see the big breakout and you go long, then you can be surprised because you may have waited too long and the market starts coming down and takes you out of your trade. And that's really frustrating, and that's what happens with beginner traders. You tend to be lured in by your charts. You're looking at them and thinking, it's going down, I'll just wait a bit longer. Oh, it's definitely going down, I'm going short. And then it starts going up and you're thinking, what's going on here? Well, the thing is that professional traders and people who trade for a living will make an early decision based on, where the market's going, because they read the candlesticks, and that's what I do. And in order to trade with the trend, you need to be able to distinguish between what is a pullback and likely to be followed by trend continuation, and what is a reversal, which is, the end of a trend and the beginning of a new trend in the other direction. So you need to be able to tell the difference between the two. And so I became an expert at that as well. And that's what I teach my students. I teach them how to distinguish between the two, so that we can take trend continuation trades with a high probability and with a measured risk, and only take the trades where the risk is appropriate to the likely reward. When you've got a pullback and you are looking for trend continuation, then you can expect the market to go as far as the last peak or the last trough, if you're trading short, the last peak if you're trading long, and even exceed those values. And when you've got a reversal, then you wait for a pullback, the market seems to be going back in the direction of the trend and then reverses again and catches you out. That's something that you can hopefully learn to avoid. So you learn when to trade and when not to trade it. Anyway, we're going to go to the charts now, and I'm going to talk you through the charts from the DAX today. This could be the Dow Jones, it could be the Nasdaq, it could be the FTSE. They all operate in the same way, and I read them in the same way, and I teach other traders how to do the same. So please do stick with me, and let's go through this chart and have a look at what's been going on. Thanks for joining me. This is Friday, non-farm payrolls day, 2nd of October. And I thought I'd give you a little bit more of an insight into price action trading, the sort of things that I look for. And so here we've got the 10-minute and the 2-minute charts in front of us, 2 minutes here on the right and 10 minutes on the left. And I specialise in short-term trading. And the reason I chose to specialise in short-term trading is because I believe that the best way to make money in the market quickly for low risk is to take regular trades, and you can do that on the short-term charts without, breaking the bank, all being well, as long as you learn what's going on and understand what's going on. And that takes a little bit of time. You've got to study hard, and you've got to then just watch the charts and learn from the charts. But these are some of the basics behind what I do. So here you can see on the left hand side on the 10-minute chart, you can see that overnight This is the DAX, and this pretty much mirrors the Dow, mirrors the FTSE, and they all operate in the same sort of way. But I like the volatility in the DAX. You can see early on, this is 5:50 in the morning, big breakout, big red candlestick bars going down, and that gave us a clue. That gave us a clue as to what the day might be like, because obviously the market got to a level here and then it started going up. And so I always compare what's going on. Was this stronger or was that stronger? And when the market plateaus, and that means there's indecision, the market very often will go back in the direction of the strongest power. Okay, so the bears were winning here and the bulls were winning here, but it was only a temporary respite before selling began again, and the bulls are just having a little resurgence here. Now, with my type of trading, every one of these little pullbacks is an opportunity to trade, and so it's important to know, this here was a small pullback in a downtrend. This was a pullback in a downtrend, and it continued until here when the market started going up, and you wouldn't want to be sitting with a short position as it's going up like this. Then the market started going down again. It's making lower highs and lower lows. You can almost see a triangle here in price action, a level flat bottom here with lower highs. That's a great breakout pattern for a short there, and the market started going down again. And every time you get a little pullback after a big breakout, little pullback, big breakout short, the market continues in the direction of the longer term trend until you get a reversal. This is a reversal because the market then started making higher highs and higher lows, and you got the pullbacks in the direction of this trend upwards. And as long as the pullbacks are weaker than the trend, then the trend should continue. You can see here the pullback was weaker than the trend, and then it went down again. Pullback was weaker than the trend, and then it went down again. And then the pullback was bigger and stronger than the trend, and the market started pulling back. So that is the sort of thing that I'm looking for in a reversal. And you can see here there is a head and shoulders bottom, left shoulder, head, right shoulder, and up, and there's also a double bottom in there as well. And that's a good reversal pattern, and the market started rejecting new lows and the market went up. But up until then, the market had just been going down, and that's because the reversal attempt was weaker than the trend before the market. You see that red candle there is bigger than the green, and people who are with a bearish bias will have gone short here. And again, this went up, and they'll be going short here as well for a breakout of that low. And that's how I trade. So, it's very usual for me to have 10 trades in a day, and the students that I teach, 10 trades in a day. And, I've had people this week email me their trades. They've had 12 consecutive winners in the day. People who I've taught to read price action, taught my techniques to 10, 7, 12 and 15 winners in a day consecutively. That's the type of trading that I do. We're on the 10 and the 2-minute charts here. There's 5 times the length of time frame in the longer time frame, which I use as a control, a master time frame. And you can see that the market is putting a big green bar here. However, the red follow through is quite strong, and actually that's because this bar here was the reaction to the non-farm payrolls at 1:30 UK time. And so, yeah, that's what I look at. So look at the strength in the moves down, look at the strength in the moves up, compare them, and then you can see here, big move down. The green candlestick bars are smaller than the red candlestick bars, and when market comes up here, you get a big red bar. You then get follow through, and they're the sort of trades that I take. So no indicators on this chart, but I would use indicators. I would place in the exponential moving averages in here because they add context for my trading. So let me just pop some exponential moving averages in here and put some good values in them. That one's okay, let's leave that there. And there you go. So when the market's below the averages and it bounces back to the averages, then they're often good trend continuation opportunities. You just need to observe what's going on in the content of the candlesticks, as well as looking at the context of the candlesticks. So, you know, an average does change, and these moving averages reflect the fact that an average does change. And when a market is and a product or series of products are becoming cheaper, then the average will go down, and people who are looking to sell and make money out of selling, and then, you know, they will, and buying back later for a lower price, they will look at when the market gets back to an average, they will look at selling when it goes above a falling average, and then that offers even better value, and you get stronger selling, which is why you got the big burst of energy here, because the market pulled back. This is the longer term, pulled back, and that was strong enough for when the market got to here, sellers to start dominating again with a big red candlestick bar. Slightly smaller response by the bulls, red candlestick bar with the big red candlestick again there, and the market goes down. Now, this candlestick is not complete yet, but at the moment the red body is about, well, it looked as though it was going to be bigger than the green candlestick, and that would constitute a trend continuation. However, I'd like to see that happen near an average. So let's put the exponential averages in here and adjust this value to 8. Okay, and it's broken through the averages from the downside, and we'll have to wait and see. If we get a big strong red candlestick bar that then finishes below this average here, I'll probably be looking to go short, and it would also therefore be below these averages when it finishes. But the video is not going to be that long. I'm introducing, gradually introducing you to price action trading, and you've got to be able to manage your risk in trading, and the regular trading gives you practice. Short-term trading means that you're quickly in, quickly out. It helps you manage your emotions in trades, and it requires discipline, because quickly in and out 20 times a day, there's not a lot of difference between that and 25. But if you take an extra 5 trades when the price action isn't right for you, then they could be losers, and that could be the difference between you winning overall and losing. And so, my aim for my students is to give them the knowledge, give them the skills to be productive, consistent traders. And whether they trade over weeks, months, years or minutes, the price action is the same on each chart. If I switch this from the 10-minute chart to the 4-hour chart, it's the same thing. It's exactly the same thing. There's pullbacks in here, market's going down, this red bar was bigger than the green bar that preceded it, Market started going down below the averages, pulled back to the average, and then started falling. Pulled back, dropped, because the pullback was weaker than the initial move, and so you got trend continuation. Pullback, quite a big strong green bar in there, but when the red bar is bigger than the green bar and it falls below the average, then there's a good opportunity, and people took it to go short. And that's on a 4-hour chart, and you can do the same thing on a weekly, monthly chart. It's all, it's all the same. They look different because they're in a different stage of momentum, but actually the principles are the same. Small red bar followed by a big green bar, and the market started going up. Small pullbacks, bigger green bars followed by more green. And you can see here there's been, and this is the weekly chart again, this is quite a big strong red bar, and we're coming to the end of this week now with not a lot happening. Who could bet against more downside? There may be a pullback, but then more downside is likely, because that was not as strong as this big red candlestick here. When it last came down, big green followed by big red, but the red was weaker than the green. Then you got 1, 2, 3, 4, 5 consecutive green bars followed by 2 red bars, quite a big red bar in there, but there was a big response. The only thing holding in the favour of the bulls here is that the market is trading above the average, which could mean that it bounces off this 20 exponential moving average here. We'll have to wait and see, and I'll be looking at the shorter term charts so that I can get in and out within a few minutes, and my capital is then safely tucked into my account where I like it. And there's some other people's capital in there as well, because I'm a winning trader. So I've won, and I trade effectively with money that I've successfully taken from the market, which is a nice feeling, and I want that feeling for you too. So if you're interested in learning to trade, at Excellence Assured Trading Academy, we've got courses for you. I do coaching and mentoring myself, and I'd be delighted to work with you. I hope you found that useful anyway, as an introduction to price action trading. Thanks for joining me. I'll see you on the next video. Bye for now.